The one thing that we're always focused on is really doing good deals that are accretive for our shareholders. So we're looking to increase NAV per share, cash flow per share. We'll do whatever it takes to get that share price up.
Yeah, but at the same time, you guys are picking up salaries and options and warrants and all sorts of wonderful things as well. So how do you ensure that you don't make the same mistakes that have been done by people who've trod the path before you? Hello and welcome to Crux Investor. First of all, thanks so much for watching this video. If you like it, give us a thumbs up. Helps us to understand which companies you think we should spend our time, money and effort on for you. And of course, do leave your comments below. That helps us understand the sort of questions you think we should be asking, how you think we've done, of course, what you thought of the company. And you can also catch this as a transcription, article or podcast on cruxinvestor.com. And for our Crux Club members, you get early access to this video. And if you haven't already done so, please click the button in the corner of the screen to subscribe to our YouTube channel. And of course, for more videos like this, click the notification bell. We spoke earlier today to Ryan McIntyre, who's the president of Maverix Metals, their royalty company, listed on the NYSE and TSX. It's a company we spoke to in January. They have advanced the company significantly since we last spoke. So their market cap's around 900 million at the moment. So they're in that kind of mid-stage. They're not a small company anymore. They're not one of the majors yet. In our view, potential for a takeout because of where they sit in the market. Precious metal focused. The revenue's about 40 million at the moment from about 13 different projects, 92 projects following up behind. So they've kind of built up quite a useful portfolio. We talked to them about some of the partners that they've got, what the advantages of that could be to them, and what they think the future looks like. So take a look in the description below at some of the topics we discuss. Anything interesting in particular, click on the number beside that topic. That's a timestamp, and that'll jump you to that part of the video. Otherwise, enjoy what Ryan has to say. Hey Ryan, how you doing?
I'm good. How are things in England there?
We are surviving, Ryan. We're surviving. I went to London, scared the hell out of me. I came running straight home. What about you? You're normally a New Yorker, aren't you? How are things there?
Yeah, just outside of New York in Connecticut, but haven't been to New York since March. So keeping safe out here.
Oh, you're like me. You're like me. Quite right. Well, look, so I haven't seen you since January, so things are busy. We're going to hear about that in a second. And you were sort of a relatively newbie then as well, weren't you?
Yeah, I just joined at the end of November, so pretty fresh into the role there. Yeah.
Good man, good man. Hey, well, look, why don't we kick off with that usual 1 minute overview of the business, then we'll pick it up from there.
Sure. Well, Maverix Metals is a precious metals royalty company. We've got 105 assets total. We've got 13 paying, and our whole goal is basically to continue to buy royalties and streams with a strong focus on gold, with a little bit of silver as well. And that's really our strategy.
Fantastic. Okay. So we've interviewed quite a few royalty companies recently. They're getting a lot of publicity because I think people are seeing obviously the precious metal market going a little bit crazy. Most of you US guys are focused on precious metals. But I want to kind of bring it back a bit again for people who may be new to this story. I know you're nearly a big boy now, but at 900 million market cap, but maybe a new story to some people. So let's talk about what you guys set out to do, and then what you were brought on board to do. Why did you come on to the team?
Just to give some people some history. So Maverix was started in mid 2016. Pan American Silver basically vended in their royalties into Maverix and basically took a large equity stake. And, over those 4 years, we've done 10 separate transactions in terms of buying royalties and streams. And I think the one that we've been most notable for is acquiring royalty portfolios from some of the largest gold mining companies and silver companies in the world. So we've done, obviously, Pan American Silver, followed that up with Goldfields, and then we did Newmont's, and then at the end of last year, perfectly timed, we did Kinross's royalty portfolio as well, and they all had big equity stakes in Maverix.
So Brian, I mean, you've got quite a few big names involved there. The Ross Beatties of this world, Eric Sprott, and obviously with Kinross and Newmont, Pan American. This is fantastic, but it's a very highly competitive environment that you are now stepping into. You've got some of the bigger players at 5 million plus market cap, and you're going to try to compete with these guys. How do some of the names that you are now working with enable you to get deals that perhaps are just that little bit more competitive?
I think there's a couple things that we've got. So I think obviously the connections with some of those large players that I just previously mentioned is critical. We get deal flow from them directly. There's a great dialogue. Obviously, we've got someone from Pan American and Newmont on our board. And I think there's certainly pretty good dialogue back and forth just from a deal perspective and also from a technical perspective. If we've got questions about various assets that we're looking at, we can always bounce some questions off of those guys. And so that's been hugely helpful. And they've also basically vetted us as a company. And so the extent that there are other royalty portfolios out there that are looking for a home, they would look at those endorsements by some of those large players as very positive. And I think you've seen that with the 4 we've done, and hopefully we can do a few more of those.
But I mean, what do you do going forward? Do you have to keep picking up large portfolio type plays, or do you just go after bigger royalties? And where do you find these? I mean, it gets harder and harder as you move up the food chain, right? So where do you find these?
Yeah, that's actually another good point. Actually, is we are at that size now where a new royalty or stream actually is meaningful to us, regardless of its size almost. So anything sort of $50 million and plus is actually really meaningful to us. And there are actually quite a few of those deals to be had versus, there are only a few kind of $1 billion deals, although they do exist. But I think that is a good point because, at some point as we grow, we will run into that problem where we need to get bigger royalties or streams coming on board. But we've got a lot of runway before that. So we don't really see that as a problem at the minute.
It's not a problem at the minute, but you need to set yourself up properly because, again, we've looked at some of the bigger royalty companies, and I won't mention names here, but if you look at their share prices, they're really, really struggling. And it seems to be a big disconnect between what they're doing corporately and what they're doing for shareholders. And money seems to be, you're making money, a lot of money, but it's being plowed back into deals, plowed back into the ground with ever expanding big ideas. But at the end of the day, I'm a shareholder. I make my money if the price of the shares go up. So how do you ensure that you don't make the same mistakes that have been done by people who've trod the path before you?
I think the great thing is that, here, Maverix, we have a lot of experience in the space. So myself and Dan O'Flaherty, who's the CEO of Maverix, we actually were working on some of the original streaming deals back in the early 2000s on the investment banking side. And so it's interesting. We've actually seen things evolve over the past sort of 15 plus years. And the size of the market has also grown a lot. I think 15 years ago, the market cap of the entire space was about 5 billion US. Now it's about 60 billion US. And that's not surprising at all because it is a great business model and the returns have been good. So it's not surprising that there have been new entrants and things. But I think the one thing that we're always focused on is really doing good deals that are accretive for our shareholders. So we're looking to increase NAV per share, cash flow per share, and consequently dividends we'd expect to grow per share as well as time goes on. And the other aspect also is trying to shrink the valuation differential between ourselves and the larger players. And so there's sort of a two-pronged approach here at Maverix to move that share price up for our shareholders. And I think it should be noted too that, Maverix insiders own about 10% of the business. So we are 100% focused on shareholders, and we'll do whatever it takes to get that share price up.
Yeah, but at the same time, you guys are picking up salaries and options and warrants and all sorts of wonderful things as well. So it doesn't matter as much to you as it does for shareholders. So talk to me about some of those ratios and why they matter and why you're focused on them.
Well, I think the biggest thing, for any investor, having spent last basically 11 or 12 years at Tocqueville Asset Management, where I was an investor professionally, I think the one key thing is, you got to increase cash flow per share, net asset value per share over time. That is the real fundamental business value of the company. And my view is if you do that, the share price might not follow immediately, but it will eventually. And that's what we're focused on, the medium and long term.
Okay. And again, I'm going to refer back to some of the larger royalty companies that we've looked at. They've got cash flow coming out there, yang, right? They're making money. It's not flowing down to shareholders. I don't expect you to answer for them, but what I do expect you to do is acknowledge that companies get to a size where they become less efficient. And as someone new to the company, coming in fresh eyes, and given your investor background, how do you ensure you kind of stay on the straight and the narrow and are focused, very much towards the shareholders, be they institutional, retail, or family office?
Well, we're certainly incentivized that way, just given that our largest shareholders are on our board as well. So they also direct how we conduct our business. But I think it's just the mindset of the people in the business. You look at, Jeff Burns, our chairman, he was the CEO of Pan American Silver for, I think, a dozen years or so. And, me being on the investment side, we really have this energy focused on shareholders, because having sat on the other side of the chair for a long period of time, we've observed what sort of works, what doesn't work, what resonates, what doesn't, and what really adds value and doesn't. And we're really just trying to isolate those types of factors as best we can and focus on those types of things for our investors. And I think, the very fact that we do own a lot of the business is critical. But I think more than that, we're intrinsically motivated ourselves. We really care about the shareholders, and we're going to do what's right for them.
Okay, so let's move on to one of the points you made there, cash flow, right? You've got, 13 producing assets at the moment, of varying degrees of producing, and you've got a lot sitting behind that. I guess that's the inflection point that most people are looking for. So let's talk about the producing components now. So roughly kind of break that down for us, and what more is to come from the current paying assets.
Yeah, sure. So we've got 13 paying assets currently. So this year we'll probably generate something in the order of US $40 million in revenue from royalties and streams this year. And the interesting thing about that is it's really well diversified from a country basis, good jurisdictions. So you're talking about 80% plus coming from Canada, the US, Mexico, and Australia. And then the other thing to note is that it's 3/4 gold, basically 20% silver, and a little bit minor parts of copper, zinc, and lead. So very pure play focused on gold and silver, basically. So I think we're very, very comfortable here.
And what's coming up behind it, is that similar kind of profile?
Yeah, very similar. Probably actually even more gold weighted specifically, and actually probably more US weighted as well. If you look at some of our near term big ones, probably the next couple to come off for us is the Greenfields project, Gemfields. We've got a 5% royalty on this open pit heap leach project in Nevada that should produce about 125,000 ounces a year. And so that thing is fully permitted. And I think there's just a sales process that's going to get underway pretty shortly here on that one. And then there's another one kind of coming off the ranks as well, Kensington, where we have a 2.5% royalty that we picked up from the Kinross portfolio acquisition at the end of last year. And what's interesting about that one is that at the time of acquisition, the royalty only kicks in once Core Mining, who's the owner of Kensington, the royalty only kicks in when Core recoups its capital. And the royalty is based on revenue. So once that capital is recouped, it starts paying 2.5% of revenue. And I think the critical thing is, when we were looking at it initially, the capital that had to be recouped, we expected to take 5 or 6 years at that gold price. But if you look at today's gold price, you're now talking about 3 years until it starts paying us. And so it's a huge, huge difference for how we thought about it when we bought it, and what a gold price can do to our portfolio, just given we've got a number of those things in the development phase in our portfolio.
I mean, you really are benefiting from this gold bull run. I mean, the price of gold and silver, getting there, helping immensely with the ability of some of these assets to get financed to kind of move things forward, possibly quicker than you had imagined, I suspect.
Yeah, absolutely. Yeah, no, I think we've benefited from a few things. I mean, obviously, the commodity price is one of them, but also from the permitting side as well. I think some countries have sped that up a little bit. We had one come recently, actually, on a Nueva Esperanza project, which is owned by Kingsgate Consolidated, where we've got a 2 to 3% royalty on it. And the project's about a 90,000 ounce gold equivalent type project in Chile. And so, they just got their EIA the other week, and we've been waiting for that for a year or two. So I think having that come through is also another huge positive. So it's shovel ready as well.
Given it's $40 million revenue at the moment, it's not huge. Okay, yeah, there's more to come, is what you're going to be telling us, I suspect. COVID has not had a significant impact on your revenues, and it's not restricted your ability to do business.
Yeah, it's interesting. So for the first month or so there, I think we were focused inward on our business, looking at what was in our portfolio. And I think a lot of the companies that we were talking about with acquisitions and that type of thing, we're doing the same thing. So everyone is reevaluating their strategies. That kind of put us on hold, I'd say, for a month, maybe 2 months. But since sort of mid-May, we've been extremely busy. There's a lot of stuff to do in the market. I think with commodity prices moving up, people want to develop gold projects specifically. And we've got a lot of those in our portfolio. So we've got 92 assets that aren't currently paying. And you can see those move forward, and you can see people raising money for them, either drilling them or starting kind of initial economic study work, that type of thing. So there's a lot going on, I would say, on our end.
Okay. I want to talk to you about something which Dan brought up when he was on back in January, around 20th of January or so. He gave an example. I know you're a new guy just then, but he gave an example of the way that you guys went about negotiating deals. And you mentioned what was then called RNC Minerals, now called Karora Minerals. And you've just completed a deal there. And at the time, it was, we'll do what's the right thing for our shareholders. And obviously, it's got to work for both sides, etc. That took an awful long time to put together. What was the holdup?
It did take a while, actually, a lot longer than I think probably both sides would have thought. But no, I think we came out to the right solution in the end. So basically, we originally had a 7.5% gold royalty on Beta Hunt, which basically represents half of the Higginsville complex operated by Karora. And the thinking initially was that it was a nickel deposit, and so that 7.5% actually they thought was the byproduct, so that was the gold. And so it was a high royalty. I think Paul has mentioned that in your interviews as well. And so we had to view the whole transaction as what could be a win-win for both. And I think from our side, we wanted to get a reasonable value for it. And obviously, Paul wanted to lower the cost structure there. But I think ultimately what it does is it really unlocks the exploration potential part of it. They don't have the hang up of what's perceived to be a really high royalty on the Beta Hunt side. And for us, we still own the other 4.75% of it. So we still are hugely exposed to it. And I think the one thing that people should remember too, this is a great illustration of the royalty model and our business model at Maverix, where, we only put in about $15 million assembling that 7.5% royalty over the past 4 years. We've already recouped 120% of that in cash flow to date. And we just sold basically a third of it to Karora for $18 million. So we've earned a couple multiples on our initial investment, and we hope it incentivizes Karora to do even more there on the Beta Hunt side, because if you look at the exploration potential there, I think it's pretty exciting. And they've done a great job as well, probably should be mentioned. And so we're expecting pretty big things out of that. So I'd guess that the Beta Hunt will actually be doing a lot better than people expect in the future.
Okay, and then the deal got slightly more complicated with the entrance of the Eric Sprott component to the deal.
Yes, yeah.
And obviously he's a big, the Sprott shareholder with you guys as well. I mean, how did all that come about?
Yeah, it's interesting actually. So the initial deal was we were going to bring on $5 million in cash from them and $13 million with the shares. And we were happy to take Karora shares, given that we did see upside. But when you have a great investor like that come along and bolster the situation at Karora, just from a marketing standpoint, from sort of validation standpoint, it's well worthwhile for us to work with our operating partners. We always try to put them in the best possible position to succeed, because that only helps us and our shareholders. And so I think it was a perfect result for everybody, because now, you have a lot more eyeballs on Karora, I would say, and you'll have more investment money flowing into Beta Hunt, where we still retain a 4.75% royalty. So we're hugely incentivized to see that one continue to do really well.
Good. Okay. Well, I'm glad that it eventually got done. I think the market was wondering what was happening, but I'm sure there's some hard negotiation going on. Can I talk about TMAC, if you don't mind? Obviously, with Shandong Gold involved, what's your take on what's going on there? How that's going to work out? Do you rate that deal?
Yeah. No, it's interesting. So we've got a 2.5% royalty on the Hope Bay property. And TMAC obviously is in the midst of a deal with Shandong, and it's gotten, I think, all the major approvals except for the major one from the Canadian government. And that's the one everyone's watching. Obviously, it's a bit of a black box, so I don't think too many people know what's going on unless you're really on the inside there. But I guess from our perspective, the way we look at it, our 2.5% royalty uh, if you just kept the mine as it was operating, it produced about 125,000 ounces a year, sort of around $5 million revenue royalty to us. And with a new player coming in like Shandong, what the operation is really missing is scale, and Shandong can deliver that by deploying more money into the business there. And so for us, the way we look at it is if Shandong is successful, it is highly likely that they'll basically double the size of throughput there. So our sort of $5 million a year royalty will sort of turn into 10 plus million a year in terms of royalty revenue. And I think the one thing that's interesting too is the gold price has changed a lot since that deal was struck. And so, notwithstanding the notion that Shandong and TMAC are in the middle of the transaction, but clearly the asset has become much more valuable since that deal was struck only a few months ago. So I think that should be, very good for everybody.
Okay. Are you worried at all about how you're performing in relation to your peers at the moment? I mean, do you feel your performance is reflective of what you're doing?
No. Short answer is no. It's interesting. So we're everyone I think got hit during the COVID pandemic. Not unusual. And then we obviously kind of came back with everybody. But I think in the past couple of months, for starters, we did the Pan American secondary. So Pan American had 5-year warrants that were issued basically upon inception of Maverix, and they expired next year. And we had some investor interest, and we basically convinced Pan American to basically sell their warrants off, or exercise their warrants and sell the shares, I guess, technically. And what happened there is basically that was a pretty large chunk of our market cap. And so basically you had some entrants kind of come in and out of the stock there, and it churned a little while. And as soon as that deal was closed, you had basically a month there, I'd say, where it was sort of seesawing up and down. And it was only recently, actually, where we started to reestablish that momentum that we had before, where I think the shares are now flushed out. I was actually buying some shares a couple weeks ago. So, we are fully confident that the business is going to do really well. And I think there is a huge disconnect in our share price in particular versus some of our peers. But, more specifically, we can see that our business is doing really well, and it is clearly worth more than it was before the pandemic. So, especially on the development part of our portfolio, where we've got 92 things that aren't in production for us. So, we see a lot of those things moving forward, and I think our shares are a lot more valuable now than they were back then. I think people will recognize that at some point, but it's our job to put that in front of people and to make sure people do recognize that value.
Can I just ask you a question, if I may, about some of the new entrants coming into the space? We've seen a lot of sort of small private companies coming in, a lot of small royalty companies listing, etc. They're hoping to work their way up that food chain as you guys have done. But is there a kind of shortcut to this process? Is there roll-ups or acquisitions that can be made?
Well, you're right. We definitely have seen a lot of new entrants come into the space on the smaller end. And, I think in the short term, I don't see much in the way of consolidation within the space, royalty space. But I think over the long term, I think that is likely. I think there is a certain amount of scale that is required in the business. And frankly, given the multiple differential between some of the smaller guys and the larger guys, there certainly is an arbitrage there to be had. So I think that'll certainly happen in the future. From a Maverix perspective, there are a lot of deals to be had now, so we don't see that at the minute. But from a Maverix perspective, we're happy to be the acquirer or be acquired. I think we'll do whatever is good for our shareholders. And so if we see an opportunity that's worthwhile to do, we'll do it. And if we're the opportunity, then that's fine too. As long as we can get the value to our shareholders, that's the only thing we're focused on.
Is there a kind of cycle to it? Because the big guys kind of like to take the little guys out because they become a pain in the side, right?
The history has shown that the larger guys do actually go after the smaller guys. And typically it is in an environment where there are fewer individual royalties and streams to be done. And so we certainly are likely to see that happen again. And, given where Maverix is and if our valuation stays where it is, we could be at risk from that standpoint.
Okay. Does the M&A component slow things down for you? I mean, does it, does it affect your business model when all of this is going on in the market?
Well, certainly from a equity perspective, in terms of the amounts that are able to be raised now, that does dampen the ability to, basically get new royalties and things on new projects and so forth, just given that it's another source of capital that's competition. So that is fine. The M&A side's interesting. It actually works on both sides because with more deals comes potential for more financing needs as well. And so, we are part of that capital solution. And, from our standpoint, we're more than happy to participate in M&A if we can help out someone acquire something, or if we have a royalty on something that someone's looking to acquire.
Okay, so let's talk about trading liquidity. That's often been a problem for some of the smaller guys. I mean, do you see that as a difficulty for you moving forward?
I would have said yes a year ago. We basically traded very thinly a year ago, but a couple things have changed since then. For starters, we've graduated from the TSX Venture Exchange to the TSX mid last year. And basically in concert with that, we also listed in the US on the NYSE American. And both those things have had a notable impact on our trading liquidity. But it still really didn't get us there, in terms of having real volume where institutions could step in a big way. But, one thing that has changed that is the Pan American secondary offering that was done at the end of May there. That actually has changed our volumes pretty significantly, actually. It should be noted that, we're not listed on any index or in any ETF currently. And I think the only reason really is because we don't really have the trading liquidity, or we didn't. But if you actually look at it today, we actually do currently meet the trading liquidity requirements for things like the GDXJ. And so, but it takes 3 consecutive quarters. And by our calculations, we expect that basically in the first half of 2021, it is likely that we'll be included at least in 1 or 2 indices and ETFs. So that should be a pretty big thing for Maverix and its shareholders, and part of the thing that we view as closing the value gap between ourselves and some of the other players.
Okay, and you think that's sustaining? You think you'll get there?
We're there currently, and so as long as we can sustain it, we will get there. Yeah.
Okay, big question, just to kind of finish off if you don't mind. Okay, so we've talked to a lot of royalty companies recently. They're all unique. You've all got your own strategy, your own view of the world. Why am I picking your royalty company above some of the smaller ones who perhaps got a little bit more leverage to them if things work out?
I think there are really 2 main factors. I think the first one is the people. I think if you look at our board, if you look at our shareholders, you look at our management team, we're extremely strong across all those levels. And, I guess from our perspective, one of the things that really differentiates Maverix is having the access to, help from, Newmont, Pan American, Kinross, and our broad network. And the other aspect is, we're not so small that we can't compete against others, but we're not so large where a small royalty is not meaningful to us. And so we really view ourselves actually in the sweet spot of activity where a new royalty added for us is really meaningful, yet we can do a lot of different things given our size. And frankly, given our diversification, we've got 13 paying assets, we've got 92 that aren't paying, diversified across all the different stages of development. So some near term, midterm, long term, and some options in far off into the future. So we're really well positioned.
Okay. And you're happy with your debt position, future revenues coming in from these 92? You think you've got that balance right?
Yeah, it's interesting. So the start of the year, we were definitely debt heavy. And if you look at the picture now between the Pan American warrant exercise and also the Karora transaction, we're actually almost net debt neutral now. So we've got about 51 million in cash and securities and 60 million in debt that we'll be paying off shortly.
Okay, Ryan, good run through. Good to catch up with you. It's been 6 months. Things motoring there. One, say hi to Dan for me. Obviously, well done on dealing with COVID and avoiding COVID. But I'd be keen to hear from you guys soon as things start to pan out for you. I'm especially looking forward to 92 different revenues joining the 13 current producing assets over the next 2-3 years. But appreciate your time. Pick up the phone if there's anything interesting to say. We'll speak to you soon.
Yeah, sounds good. Appreciate it.